In this video, I'll be analyzing waste management stock, ticker symbol WM. The goal of this video is to understand their business, understand their financial performance and position, and ultimately arrive at a conclusion on if this is a good stock for dividend investors. Make sure you stick around until the end of the video to see what I would rate waste management stock on a scale of 1 to 10. Before we get into the video, just know that I'm not a financial advisor. Everybody's financial situation and goals are different, which means that the optimal investments for everybody will also be different. What I will be doing in this video is presenting some information about waste management stock and giving my opinion, but always do your own research into your own investments. Also, I just recently released my first dividend update episode during this last week. I need a good name for this series and intelligent questions from you guys for the next episode, so leave those in the comments below. With all that said, let's jump into the analysis of waste management stock. So what does waste management do? Well, waste management provides services like collection, transportation, and disposal or conversion of trash and recycled goods to all customers, including households, businesses, and governments. They serve over 20 million customers throughout 48 different states, the District of Columbia, Canada, and Puerto Rico. They own and operate 26,000 different waste collection and transportation vehicles, almost 350 transfer stations where they process, compact, and store waste for long-range trucking, and nearly 300 landfills where the waste ultimately ends up. With all this infrastructure, Waste Management is able to be the leading waste disposal company in the United States. In addition to being the largest waste disposal company, they're also the largest recycling company in the United States and Canada. They operate nearly 150 individual material recovery facilities and have processed over 5 million tons, or 10 billion pounds, of recycled commodities since 2002. So next I'll be showing you guys some information on the industry that waste management is in. But really they operate in two different industries, waste disposal and recycling management. But they are substantially different industries, so I'll be analyzing them separately. The global waste disposal market in 2017 was about $330 billion. However, it's expected to grow by about 6% every year until 2025, according to Allied Market Research, at which point it'll be $530 billion in size. So the key factors to this market growth is growth in urban population, an increase in the amount of waste that each person generates, and a rise in environmental awareness. Many people think that as environmental awareness increases, waste generation will decrease, which may be true to a very small extent, but it really means that people will need to find proper ways to dispose of their waste, and that's where innovation from companies like Waste Management comes in. Also, if you look at the graph on the screen, the United States is the world's leading producer of waste. That means that the need for proper waste management will continue to be strong in the United States moving forward. Waste management holds a commanding position in the United States market, and the graph on the screen demonstrates this. When only looking at landfill volumes managed, which doesn't account for any of the recycling business at all, municipalities, or your city or town trash, account for 27% of landfill management, followed closely by waste management at 26%, and Republic Services at 20%. Now overall, with the reliable nature of their business and higher than GDP growth expected in the future, I would say that the waste disposal industry is very favorable. Conversely, the United States waste recycling market is expected to rise at an annualized rate of 1.5% for the next 5 years. The main driver for growth in this industry is the wider adoption and utilization of recycling services. Changing social sentiment around environmental issues and strong governmental support in some municipalities will boost demand, although less than the waste disposal industry. However, in the recycling industry, they're not just one of the top 3 companies, but they are by far the largest company when it comes to recycling. According to IBISWorld, Waste Management is estimated to be well over 3 times larger than Republic Services, who is their next biggest competitor. In general, I would say that Waste Management's recycling industry is still attractive, just a little less attractive than their main business industry in the waste management services industry. So now that you understand the business environment that Waste Management is competing in, let's see how they've performed over time by analyzing their income statement. On the screen now, you can see Waste Management's revenue since 2007. And as you can see, the company's revenues have been fairly stable over time. Now there are some dips, with the largest dip of about 12% in 2009. This shows us that there is some exposure to market downturns, but it's pretty mild. So in the coming year, with the economy facing challenges, they'll probably see a small shrinkage in revenue, but nothing that'll hurt the company in the long term. And now you can see a chart of their free cash flow from Waste Management over time. This shows us that the company, even when revenue dips, has never been close to producing negative cash flow, which should give some comfort to investors. Also, you can see a drastic increase in free cash flow during the past 5 years, and most of this is due to investments that they've made in the past to help reduce future expenses, and that's one of the key indicators for a very well-run company in my opinion. Now, regardless of how the company has been able to weather storms in the past, I find it comforting to know that my investments can take a financial hit and still be fine in the long term. So let's analyze Waste Management's balance sheet. Now I wanted to highlight 3 key areas of their balance sheet: their current cash on hand, total debt, and their liquidity, which will be seen through their current ratio. As you can see from the graph on the screen, Waste Management has not historically kept a lot of cash on hand. This is probably because they just paid off their line of credit with any cash that they've had on hand. But in 2019, they showed that they had over $3.5 billion in cash. This is just a cushion that they could use to pay off debts, or it could be used to fund a possible acquisition, but either way it's a positive. And you can also see their total debt over time. It has increased, but it's not really concerning to me. For example, if they decided to pay off long-term debt with the extra cash that we just talked about, their debt would have actually decreased from 2018. So really this graph would look pretty flat. And lastly, you can see their current ratio over time. This is a measure of liquidity because it shows how well the company's current assets will be able to pay off their current liabilities. It's usually good to have a current ratio of at least 1, but I feel comfortable when it's around 1.4 to 1.5. So, with the company reporting a current ratio of about 2, I think that they're in a very good position to ride out the current storm that they're in, or any struggles that they might face in the future. If you've been following the channel for a while, you know that I value dividend payments and their safety pretty highly. So how does Waste Management measure up in this category? Well, they haven't been a public company for a super long time, but the majority of that time, 17 years, they've been paying out a dividend and growing it every year. They currently yield 2.24%, while maintaining a fairly conservative payout ratio of 61%. Now, for the reasons that I laid out in the income statement and balance sheet analysis, like their strong historical performance during downturns and very good current ratio, I think that their dividend payment is pretty safe, and I don't expect it to be cut. Now, recently I've started to weigh the quality of the companies that I'm buying a little bit more heavily than the price that I'm buying them at. In my most recent video, the episode 1 that I talked about earlier in the video, I mentioned how I'd be switching to allowing M1 Finance to auto-invest based on the allocations that I set up in the portfolio. Now, this should theoretically only buy stocks when they fall more than the general economy, and not buy any more when they're growing more than the general economy. Now, I won't be completely ignoring the price for these companies, because it does still matter, but mostly I'll just be making sure that I'm not substantially overpaying, because when a company's quality is high, it does command a higher valuation. So currently, Waste Management trades with a PE ratio of about 24, and although this is a little higher than the market, I think it's a fair value. Not only do I think it's safer than the general market, but they also pay a dividend, which not all companies do, and they're still a growing company, although it may not be super fast. So to sum up my thoughts on Waste Management, I really like them as an investment. I think their business is operating in a very good industry, both the waste disposal and recycling portions of their business. They've performed well through past downturns, were very well capitalized going into the situation, and pay a sufficient and safe dividend. So on a scale of 1 to 10, from my perspective, I would say Waste Management is a solid 9.5. But like I mentioned at the beginning of the video, always make sure you do your own research. Now, if you guys enjoyed the video, please like it, because it tells me what content you guys enjoy, and helps out the channel. And subscribe for more videos like this, and on the screen in a second, there'll be 2 videos popping up. So watch one of those. I'll see you guys in the next video.